Hey, Courtney Smith here with our weekly TradeSmith video newsletter. And as always, there's lots of exciting things going on in the week, a lot of very interesting developments. This is not one of them. It's not that interesting, but it's valuable that you do understand it. Let's dive right in. First of all, here we can see the S&P 500. Now, what I've been talking about for several weeks has been this potential head and shoulders top. You can see I've still left the right shoulder, the left shoulder, the head, the neckline. And if you remember a week or so ago, we broke below the neckline but closed back up above it. But notice that what happened over the last week is something very bullish. And that is that the price traded above the right shoulder. Now, as soon as it trades above the right shoulder, the head and shoulders formation is now invalid. We can now ignore it. It's not a top in the market anymore. So that was rather significant to me. Now, one of the things, though, that this rally that we've had, well, it's not that great of a rally. Notice my two green lines on there. The first green line up top shows the market has rallied up quite strongly. But notice down at the bottom down there that it happened on light volume. Now that means that the volume is not confirming the rally, and therefore this is a weak rally that should end pretty soon. So maybe we go up to maybe 2050, we stiff out the old highs that we made before, but that's probably about as far as this rally is going to take us for now. Dow Jones, same story, blah, blah, blah. Okay, NASDAQ, a little bit different story, but you can see it is still struggling. It's still the weakest of the three big indices. Now, seasonality, this is our seasonality indicator. And the green line has been the key now for about a month. I said that if we break below 108, if we close below 108, then I'm going to say that the bullish seasonality from October to the end of April is over. Well, but Courtney, we're in May. Well, of course, seasonality is not a precise thing. It can be a little bit short, it can be a little bit long, it can start early, end late. And so far, we've been in a very clear seasonal bull move. And so that's been quite bullish for me. I show you the two orange lines, which show how the Russell 2000 broke out of a down channel or a flag formation and has moved up and is sniffing out the highs that we made in April. So right now, this move that we've had in the last week and a day or so is a very bullish move because it bounced off that 108 level and boing, it just shot up. So now there's no danger of breaking down below our seasonality. So we still have to remain extra heavily weighted. We need to have bigger than normal positions on the bull side. We've gone over that before, nothing new there. This is where we are on the yield curve. You can see that according to our yield curve analysis of what happened to the yield curve a year ago, this should be exploding to the upside. Asset allocation has moved bullishly as well. Notice that money is flowing out of the bond market and into the stock market. Now, we're going to get into bonds. That's a very interesting story as well. But over the recent past, we've seen the bond market go down. So money that people are selling their bonds in order to buy stocks, and that is bullish for the market. The risk appetite also rallying up a little bit, not super strong, but it does show that the market's getting a little bit friskier and wants to take on more risk than normal, and that's what that's showing there. So that's also bullish. Global shares followed the U.S. market, but not as strong. Of course, the place that I'm most interested in is the Greek shares. Nobody's with me in this trade. Normally, I love to be in trades that nobody's talking about, so I love this trade. Couple things we need to look at. First of all, look at the horizontal orange box there. That's a rectangle formation. We broke out of that rectangle formation, and the market's been in a bull move ever since. I've shown two green lines which show the up channel that we're in. And yes, we did drop over the last 4 days, but that should be just down to the bottom of the up channel. The final thing, though, and all that's bullish. Everything is bullish. But look at the two red arrows. The top red arrow is pointing to a couple of gaps. Now remember, on any foreign market like Greece, the U.S. stock based on the U.S. ETF based on foreign shares like this one has lots of gaps. So I don't want to pay too much attention to those gaps, but look at the heavy volume that they occurred on. And the market sold off basically since then. So we have to be alert that this is a speculative blow-off formation, and we'll know that if it breaks the bottom uptrend line, the bottom green line. Once it does that, you got to be out of your Greek shares, because that was a speculative blow-off that occurred about a week ago. So watch it very closely. 830, if it closes below 830, we don't really want to be involved in this anymore. Now, I mentioned the bonds before. You can see that over the last week or so, the bonds have sold off, including one really hard down day where we gapped lower. So money's flowing out of bonds, and it's flowing into the stock market. Let's take a look at why. Well, the bond key factors are kind of a mess. You can see the top one, gold, is going down, CRB is going up, 10-year treasuries in Germany are going sideways. Let's go back to that chart. So I think we're going to stay in this trading range. I think that we're going to stay between 133 and 127 for the next couple of weeks. I just don't see a really good opportunity here in the bonds until we break out of that rectangle formation. All right, let's go to the dollar. I said that if we broke above this 95.25 area, that this would be very bullish. It is clearly broken above the 95.25. That's the green line. So now we have to assume that the market will go back up to maybe, let's say, above 98. That's a pretty good move. That's a 3% move, which is a pretty big move in the currencies, and that's certainly a tradable move. So I think we want to be long the dollar here. If it breaks back down and closes below that green line at 95.25, then I want to go back on the short side. Now that's having a big impact on the gold market. Look how weak the gold has been. And look at there's 1, 2, 3, 4, 5, 6, 7, 8 days in a row that we're down. That's pretty bad. That's pretty bad. So let me go through all my squiggles on this chart, all right? So the top two green lines, the ones that are down, shows the channel that I had shown, the flag formation that I had shown you in previous weeks. But notice that what should have happened if it was a bull market is it should have broken up through the top line down, but instead it accelerated its down move and broke the bottom. That's very unusual, but it happened here. And it shows you how weak the market is. Now look at the two red lines. The top red line shows the sharp acceleration down in the market, and the bottom red line shows that the volume went up. In other words, it confirmed the bear market that we've got here. So this is pretty bearish for gold. Now, there's only one line of defense here, and that's the 1210 area, $1,210 per ounce. And that's that horizontal green line there. That's the old low that we made. And if we break that low, you're going to see a lot of selling come into the market, and you've got to be out of your gold positions. We've got to protect ourselves. We had a big bull market earlier in the year. We made a lot of money. Now the market, as you can see, is chop, chop, chop. I don't like to trade chop, chop, chop. I like to trade only trend, trend, trend. And this is not a trending market. It may be about to break into a bear market. So let's be very cautious here in the gold market. Watch that 1210 area. Break that out of gold. Here's our key indicators, and you can see they've turned bearish, clearly bearish. 2 out of 3 are going down. 1 out of 3 is going up. Net, net, that suggests a modest bear move, which is exactly what we're getting. Oil, listen, I was wrong on oil. I thought we'd peak out. Maybe we are going to peak out here at just about $50. But right now, from a technical perspective, it's in a bull trend. Production is declining quite sharply in the United States, and that's supportive of the market here. We're seeing the refiners not making as much money as they used to, and as a result, since they're not making the money, they are reducing their demand for crude oil. Now, at the same time, though, the supplies are coming down faster than the demand is coming down, and that's supporting the market right now. So we got to go with our trend, and that is up. All right, everybody, of course, you know this. I've showed you this before. Would love to have you be a fully paid up member, but I have a special announcement here. We're just releasing a brand new course. I'm very excited about it. I'll keep this pitch very short. This is a 4-week course on chart trading. Now, you know, I talk about head and shoulders and trend lines and all these rectangles and all this sort of stuff. Well, I want to teach you this course so that you really understand the full ramifications of what I use and why I use it. So it's a 4-week long course. Very easy. It starts with a baby talk, goes right up to some advanced techniques that I've never taught before, ever. Nobody's ever taught them before, because these are my enhancements on classic chart techniques. So we're going to start, even if you don't know anything about charts, we're going to show it to you right from the baby talk right on up. Video instruction, you'll receive a new drop of video instruction on Monday. And then we have a live group coaching session coming up on every Wednesday night. So I'm very, very excited about this. I love the group coaching. I get great questions. As you know, I have the best students in the world, and they prove it every single time on these. So video instruction, we give you video instructions. Then I stay and answer all your questions on Wednesday. It starts June the 6th. June the 6th will be the first video instruction. And basically, I'm just looking here. Yeah, it's every Monday and Wednesday through the month of June. So this is coming up right away. You can get involved right away. Now, you can go to this website, bit.ly/chart trading, and that is a capital C and a capital T, and you can go learn lots more about it. I go into gory detail. We talk about the guarantee, talk about the price, talk about all that sort of stuff, a lot more detail on what you're going to learn. But if you like what you're seeing here on TradeSmith, I would highly recommend that you go and take this course coming up. It's a peanut for what it will do to your life in terms of you creating more financial freedom. It's a peanut. We have a lot of fun. It's going to be great. First time we've ever taught this, ever. So I'm very excited about it. All right, thanks very much, freebies. Love having you here, and we'll talk to you guys next week. Fully paid up members, hang on just one second. Got new trades for you, and we'll talk to you in just a second.